What's happening, traders and investors? It's Rod with Powell Group. Welcome back on the Pursuit of Wealth for a daily market recap. Today's a recap for Wednesday, June 16th, and we got lots to cover today. We had some fear pickup in the market, and if you tuned into my video from yesterday, I gave a little bit of a heads up that we could see some downside today, and we'll go through that and why I had that thought yesterday, and we'll look at the chart here in just a moment. But as we normally do, we'll run through some news and events on the day, and I'll put some timestamps in the description below as well. But make sure to smash the like and subscribe to the channel. So the Dow drops more than 300 points after the Fed sees an inflation jump and possible 2 rate hikes in 2023. And you just can't trust these guys, right? You can't trust the Fed as far as you can throw them. They say time and time again they don't see inflation as an issue, and no rate hikes in sight. And then the next meeting, they come out saying, oh, inflation has become an issue and we're seeing 2 rate hikes. So, anytime that they say that they're not even thinking about it, I don't even pay attention to it anymore. I just look at the charts and what the charts were telling us. And the charts were telling us that we could expect some downside today. So we'll look at that in just a second. But the Fed interest rate decision stays at 0.25% for the time being. And like I said, the market was just spooked on that potential double rate hike in 2023. Inflation also jumps to 3.6% in Canada, which is the highest since 2011. And I just don't understand how these experts don't think that inflation is going to be an issue when you print trillions and trillions and trillions of dollars. Obviously, that is probably going to be the biggest risk to the market. So before we jump into the broader market, we'll just look at the crypto space here. So pretty much all of our asset classes fell on that news leading up to that FOMC. And we had some pretty huge upper wicks, with XLM seeing the biggest one there, going from about 31.5 cents to 33.5 cents in short order, about 30 to 45 minutes. So we were not spared. Actually, Bitcoin started daily consolidation today before the S&P 500. So that gave us a little bit of a clue. And if you've been tuning into this channel, or if you've been looking at the markets for the last year and a half or so, Bitcoin has been leading the market. There has been some correlations time and time again. Of course, correlations come and go, but it seems like Bitcoin is leading the market once again. And again, we had that little bit of a heads up today that we had daily consolidation. As soon as we lost 39,510 on Bitcoin, we started daily consolidation. We still are holding these higher lows, so no major red flags trying to close above EMA 26 here today. But just a healthy higher low in my opinion. But another reason why we were skeptical and why we could potentially expect a sell-off today was this rising wedge that I mentioned yesterday. And then we had the inside bar today that broke bearish. So once we lost 423.54, you could have exited seeing that rising wedge pattern. And if you would have exited from there, we hit a low of the day at 419.92. So just exiting on the low of yesterday being lost would have saved you about almost 1% of downside. And we also had another clue, and that clue was the dollar. So I mentioned in my video yesterday that we had a daily cup and handle. We were in a daily uptrend on the dollar, and we had a daily cup and handle with a bull flag here that actually saw tremendous follow through. And we were in a daily uptrend. I said, as long as the dollar remains intact, then the market is at risk. And sure enough, we had that cup and handle that confirmed. We did have resistance at 91.43. We got as high as 91.38, and we're pulling back. So as long as we maintain the daily uptrend in the dollar, we're going to be a little skeptical in terms of the overall broader market. So pretty much all names consolidated today. IWM actually confirmed a daily downtrend with a lower high and a lower low. Taking a look at QQQ, so again, started a daily consolidation after that inside bar bear break, but closed back above EMA 12, so lots of dip buying there with a lower wick on the tech sector, and we have no support down to 328.28. So we knew we were due. It had been 8 days in a row without any daily consolidation, so we knew it was coming, and today it came with that FOMC statement and ultimately closed back above the EMA 12 and the 10-day moving average, which is bullish in my opinion. SMH very correlated to QQQ, but has been a little bit weaker, and that's very evident as we just barely closed over the 10-day moving average. QQQ closed well above it, and EMA 12. So SMH, QQQ still very correlated, but QQQ being the stronger of the two. And US oil continues its strength, but had a bit of a bearish reversal there. So we're starting to see a potential close near the low here. We still got an hour and a half left on this daily candle, but it's just been all bulls on US oil as of late. And the metals were weak today as well as a result. So we've still got about just under 30 minutes left. But look at the weakness there on gold. So we've been saying for a while that gold has been weak with a daily downtrend confirmed with a lower high and lower low. And gold was leading silver for quite some time, but now silver's standing out as the stronger one here comparatively. 2703 is support, and gold already losing its 1856 support. So next support on gold is down at 1808, and we could be heading to daily oversold in this daily downtrend. Still yet to see an EMA 12 and 26 bear cross as well. XBI, so the biotech sector, again, daily consolidation closing above EMA 12 and the 10-day moving average. XLE, the energy sector ETF, was fairly strong today. Didn't even see daily consolidation, so not surprising with the strength of oil. And that was one of our only major sectors that didn't really see any daily consolidation. XLF continues its weakness, topping out at EMA 26 here on the daily and continuing daily consolidation. We could still see an EMA 12 and 26 bear cross there as well. And with some of our names entering daily downtrends, it's very, very concerning at the moment, and we're going to be on high alert into tomorrow. We also have XLV, so the healthcare sector, after confirming a daily uptrend going into daily consolidation today, but no major red flags here. So still holding EMA 12, didn't even lose it. So healthcare sector standing out as one of our stronger sectors as well. Tesla managed to close over 600. We did start daily consolidation yesterday and saw a bit more today, but not much. We do have support at 571. 546, and then the big one at 539. But held up relatively well, all things considered. In terms of the overall individual tickers and watch list today, so we had BlackBerry down about 8%, Very, which had a raise, so we were down over 7% there as well. AMC, CLOV. On the bull list, we had MVMD, SHOP, and DFLY. So MVMD seeing a nice day again today. All things considered. So we did bounce on the daily. We broke the high of 49.5 by half a penny. So we were trying to bounce here on the daily, but we need to see follow through into tomorrow. So the high of the day today at 50 cents is going to be important tomorrow, but we are expecting a type of tightening range in equilibrium and a lack of resistance up until 79. I just want to bring up the BlackBerry chart here. So this is another one of those names when we ran from $7 to $20 again, very similar to this move. Nothing goes straight up in a straight line, and I know a lot of people online and on YouTube are saying not selling, and that's fine, right? We had a gap here at 1161, then that's fine if you're holding long term. If you're in a TFSA or a type of account that you can't enter and exit frequently, then that's a different story. But personally, I have BlackBerry in a no touch account. I do this with a lot of stocks. I have a no touch account, and then I have a swing and day trade account. That way you get the best of both worlds, and you have a position for the long term, but then you're able to play these highs and lows and sell into strength and then buy into scale into weakness. But we knew that we were due for consolidation. We had a gap there at 1161, so we're likely heading to fill that gap. We also have the EMA 26 at 1215. So if we do hold 1215, then we will potentially look for a bounce tomorrow. But if we lose 1215, we're likely heading to that gap fill at 1161. And here we are after signaling I sold my position in BlackBerry over $16. And here we are from the top down almost 40%. But even just from $16, or even if you just entered on the loss of the daily high or low. So as soon as we lost the low here on June 8th, on June 9th, that was the signal, right? That daily consolidation was starting to begin. And even if you just exited on that signal, you would have saved yourself about 17% of downside. So it's not that we all have crystal balls or anything like that. It's just in our group, obviously, we have technical analysis. We do a lot of charting, and we can tell what the most likely scenario is going to be. Doesn't mean it's an absolute guarantee, but just like SPY, we saw some multiple clues, right? We had the rising wedge. We had the dollar with a cup and handle leading into that the Federal Reserve meeting. So the dollar was in a daily uptrend. That was clue number one. The dollar had a cup and handle that was seeing follow through today. That was clue number two. And clue number three was this rising wedge on the S&P 500. So we had all the clues. You just need to do your homework and be prepped. If you were surprised by the move today, then it's very, very evident that you could stand to maybe just do a little bit more homework or learn a little bit more about charts or join a community or something like that where we have a group of experts. We have everything from new investors to absolute green investors who just started, yesterday. And then we've got experienced investors and traders as well who've been at it for multiple years and decades. So it can pay to be a part of a group. And again, not everybody is going to be an expert at everything. And that's another great thing about the group and our group specifically, Pursuit of Wealth. Check out pursuitofwealthgroup.com or powgroup.ca for a 1-week free trial. Come check us out. And like I said, we've been giving heads up on this now for at least 2 days, if not longer. So I know a lot of people in our group were prepared for it, and it's just a matter of taking the time and doing your homework and being prepared for all scenarios. We don't know what's going to happen, but we can look at the most likely scenario and we can be ready for every scenario, right? Stocks can go up, down, sideways, so you need to be ready for all three of those scenarios. Thanks again for joining us on the Pursuit of Wealth. Make sure to smash the like and subscribe to the channel on your way out. I would appreciate it, and we'll see you a little bit later on for an MJ sector review.